With the big news that the Fed finally dropped rates, everyone wants to know how is it affecting the New York real estate market. Hi everybody, I'm Iman Bakadari from the Bakadari team at Douglas Elliman, and today we are going to have a phenomenal discussion regarding this big news, and I have Gabrielle Correo here.
Hi, Iman. So happy to be here. We also have Ron Riemer of CitiBank. He's the Assistant Vice President and Senior Loan Officer. He's been in the business for over 20 years. He is a trusted advisor of Douglas Elliman. He has helped so many of our clients with mortgages over the years, and we absolutely love working with him. So happy to have you here with us.
Thank you so much for having me. I'm very excited to be here. Ron Riemer with CitiBank, NMLS 33210, and looking forward to our discussion.
So Ron, let's get right into it. Everybody wants to know, how are mortgage rates moving lately?
They're moving down. We're in a new cycle of rates coming down, and they're the lowest the rates have been since February of 2023.
Wow.
So Ron, one of the questions I get from buyers is there's some confusion. So what is the distinction between the Fed funds rates and the mortgage rates?
Sure. So the Fed funds rate is the overnight rate that banks lend to each other. The Fed funds rate incorporates all interest rates. It incorporates checking, savings accounts, car loans, student loans, mortgage rates as well is one component of that. Mortgage rates are more tied to the 10-year yield or the 10-year treasury.
Got it.
So, we're watching Chairman Powell talk about the market and the rates. So can you describe, how do his comments affect rates?
His comments are as important as the actual rate cut decision. So in his comments, you want to see the buzzwords of dovish or hawkish to see how the future of rate cuts are going to look and how cautious he's going to be on a going forward basis.
So everybody wants to know right now, how much further are rates going to come down? Based on the current numbers we're at right now, how much room do you think we have?
So the Fed actually raised rates for 11 times over a 15-month period, and now we're in a new cycle, which is very exciting. The Fed cut rates for the first time in the cycle. There should be room to lower rates by about 175 to 250 basis points over the next 12 to 18 months.
So, Ron, can you explain what it means to add points to your closing? What's the benefit?
So adding points to your closing is actually an option to purchase a lower interest rate. So adding points to your closing is basically a cost of your loan amount to have a lower interest rate.
So, Ron, just for clarification, what is the difference between a basis point and a discount point?
So 1 basis point is 0.1%. So if you hear the terminology 25 basis points, that's 0.25%. A discount point is a percentage of your loan amount that you're using to purchase a lower interest rate and discounting your rate.
So what does that mean for buyers? How does that benefit them?
If they're purchasing discount points, they're able to get a lower rate, which is going to be a lower monthly payment because you're paying a lower rate for your mortgage. So for example, if you're able to buy down your rate by 1%, you're able to increase your purchasing power by about 10%. In that example, let's say you're buying a property for $1 million. Now you can afford a property for $1.1 million.
Awesome.
Wow. And it's so funny you say that because, taking out buyers and showing them properties, I've been getting this question on a frequent basis. Which is, they're wanting to know how much mortgage the sellers have. And I'm asking them, why do you want to know that? And it's because they want to. They think they can transfer the mortgage from the seller that they got, let's say they got a 2.5% mortgage 3 or 4 years ago. They want to get the rest of their mortgage and inherit that from the sale. Can they do that?
Generally speaking, no, mortgages are not assumable, but there is a small segment of the market that has FHA loans, and those could be transferable.
So right now, with the rates still being somewhat elevated, I'm seeing that buyers are still having some difficulty, affording the monthly mortgage payments still. So I'm wondering, is there anything that sellers can do to help buyers with affordability?
Yes, sellers can offer what's called as a seller's concession, where they're basically adding a discount to the buyer for them to purchase a lower rate with discount points. Yes, there is an advantage to the seller offering those options to buyers.
So how does that work? How does the seller buy a lower rate?
So basically, it gets added to the contract where a portion of the purchase price is added to the transaction as a concession, and then the buyer is able to provide that to their bank, and then the bank can lower the interest rate based upon what the seller is giving them.
That's great.
So Ron, in real dollars, if somebody was going to buy a property with a 7% mortgage, which is what we had before, and now let's say we're looking at a 5.5% mortgage, how much would they save?
On a $1 million loan in that example, they would save $975 a month, which is pretty substantial.
Oh yeah, that's like, in that scenario, would be a lot of times your entire common charges.
Absolutely. It's a nice
Wow.
savings for the buyer to consider.
So looking at where the rates are now and where you're projecting they're going to be, what would you say buyers should be looking at in terms of rates? Should they be looking at fixed rates? Should they be looking at ARM rates? What is the best scenario right now?
Buyers should look at all options, but most of the buyers I'm talking to are focused on adjustable mortgages because it's the lowest rate option available, and then they still have the option to refinance into lower rates once rates continue to come down.
Yeah, because something that's been sort of swirling in my mind is we used to do adjustable rate mortgages, and they were coming in at 5.1, 7.1, and 10.1. And now I'm seeing 5.6, 7.6, and 10.6. That's kind of confusing to me. Can you explain what changed?
Yeah, what changed was the index. So before, the ARM, adjustable rate mortgage options, were tied to the LIBOR index, and now they're tied to the SOFR index, SOFR standing for SOFR. So the fixed period is still the same 5, 7, and 10-year fixed ARM options, but now after the fixed period, they're going to adjust every 6 months instead of every 1 year as they were before.
Okay, so for instance, if you have a 5.6, after 5 years, your rate floats up to whatever the current market rate is, and then it'll adjust every 6 months.
Correct.
Got it. So Ron, we've worked together for many years now, and you've done my last 2 mortgages. And can you talk a little bit about the advantages of working with CitiBank?
So Citi has many great programs. So one of our best programs today is our relationship pricing program, where a customer can actually get an even lower interest rate if they're able to move assets to our bank.
Ron, there's another program that I know you have. We've been in multiple bid situations with buyers, and they've needed to remove their financing contingency in order to win the bid, and you were able to underwrite their loan completely before they even signed the contract. Can you talk a little bit about that program?
Yeah, that program is our Sure Start program. So it's the next level after pre-approval where a borrower is able to apply with our underwriting department and get fully underwritten and get a commitment letter, which can help strengthen their offer and separate themselves from other buyers in the marketplace.
So Ron, the question that's in everyone's minds is, given the fact that in the next 12 to 18 months we're expecting rates to continue falling, why should buyers buy now? Why shouldn't they just wait until the rates have fallen?
Buyers should not wait. They should buy now, take advantage of the current market conditions. You know that rates are going to continue to be cut by the Fed. They've announced that. If you buy now, you can take advantage of today's current pricing, and you can always refinance later on once rates are cut even further. If you wait for the market conditions for rates to be lower, you may be in a market where prices are even higher with more buyers. So buyer, I don't see any reason to wait. If you're thinking about buying, you should definitely consider now.
Thank you so much for this incredible discussion. I think you are so good at explaining the way the market's moving. And Gabrielle, thank you so much.
Thank you.
Thank you for having us.
Thank you, Ron.
Thank you.
Thank you all for watching. We hope this was helpful. Follow us for more content and stay tuned for the next episode.